Hey traders, welcome to Charts and Coffee. Happy Thursday, everyone. Great to see you all. All right. Okay, so we're going to take a quick look at a couple things on the economic calendar, take a quick lap through the market, and then, as always, get to your questions. So let's start off with the economic calendar. And we'll start off with the Forex Factory calendar. This is the one that I go to the most. And if we go down to the 17th, Thursday, 8:30 Philly Fed. So that means we're 30 minutes, obviously, after the fact. We can look at the 8:30 reaction for the way in which the market digested this. I'm not really concerned about what the number is, although clearly a very disappointing Philly Fed. And we'll have to see how the markets responded to that. We also have a lot of Fed speak. You see Bullard at 8 a.m. So before Philly Fed, what kind of mood was the market in? 9:15, we've got Bowman, we've got Meester today, Jefferson, a lot of new names. And this means that pretty much all morning long, Jefferson is at 10:40 a.m. We've got one after the other of FOMC chuckleheads. Now, what are they going to say? Well, remember, it's very difficult to trade speeches and appearances, because what happens is, rather than a data release like unemployment claims or Philly Fed manufacturing, where we get a headline number, boom, an instant reaction, for as long as any of these FOMC speakers are speaking, saying whatever it is that they say, we're going to see that movement in the market based on whether or not we perceive it as more hawkish than expected or less hawkish, which means it makes a lot of sense, especially on a morning like this, to go check out the CME FedWatch tool, jump out to May and see where we are. Gang, this is a pretty significant shift, right, that we're seeing where once again, we're leaning towards 5 to 5.25. This is slightly more hawkish, slightly. It's still within sort of our area of expectation, but it's more hawkish because it's a column that's more to the right on this graph. And therefore, that is generally bearish for equities. All right, let's see if all that's syncing up with what we're inheriting this morning. Take a look at the S&P intraday, and let's head on over where we are right now. This is since the 1:30, 2 a.m. Eastern European Open. So if you'll take a look, where did the bearishness start? In Asia? No, in fact, Asia was climbing a little bit higher. The bearishness kicked off as Frankfurt and Paris were opening. It continued as London opened. It continued as the Asian session closed. It continued into 7 a.m. where, we could say that's when New York's pouring its first cup of coffee, sort of this morning U.S. Open. And it continued right down through Bullard. It continued right down through the 8:30. So is this Bullard? Is this 8:30? No, not at all. The mood was already bearish well before those two 8 and 8:30 Eastern events. Now, the flip side of this, my favorite market internal, if you will, bonds. What kind of mood were bonds in? Kind of hanging in there. Bullish bonds are bullish for equities. Bearish bonds are bearish for equities. So because bearish bonds are higher yield, bullish bonds are lower yield. So inverse to the yield. If bonds are heading lower, that's pretty bearish also for equities. All right. And then lastly, this is one that maybe you've seen me use before, the yen, right? So remember that if you're using, for those of you out there using V-score for the yen, remember that if you are using the V-score for the yen, you're going to have to stretch the V-score out, because the yen pricing is very, very, look, it doesn't even start giving us a read until, a number to look at until the third decimal point. So remember, you're going to have to widen that out to see the readings. But let's talk about the yen. It's heading lower. This is a little mixed. It's a little mixed. It could be one of two things. Are we looking at a stronger dollar? The answer is yes. So we're looking at a stronger dollar against the euro. We're looking at a stronger dollar against the yen. So this, again, little mixed in terms of the yen weakness, which we would oftentimes perceive as bullish for equities, but when it's being driven by a strong dollar, this is how I determine it. We know that that could be bearish for stonks. All right. So with that being said, gang, let's jump on into the questions. As always, phone lines are open for your request, and kicking it off with, let's move the chart out of the way. Kicking it off with, all right. Avi, all right. ES, daily chart. Oh, yeah. Let's head on over there. ES, daily minor high. Broken. It is slow stochastic. Let's do this. Let's jump on over to the HPMR layout. I got a lot of layouts. I love that I have a lot of layouts. I've got a layout that is custom to trending markets, markets where I want to measure volatility, markets where I want to prioritize measuring volume. Feel free to have a lot of layouts where you can take all the different tools and add them to a specific sort of dashboard. I love to do that. And yes, S&P bearish conversation. We had this bearish conversation with the Sector Secrets Mastery folks in the Simpler Futures room this week, and we are getting that movement already pre-market. There's your signal. In fact, this was a setup I think we talked about on Tuesday's free video and premium video. And there is the signal. Yes, resistance at the V-score, slow stochastic, neutral market, and yeah, we're looking for weakness. Absolutely. Am I looking for new lows? I am not. Is it a classic setup on the daily? Pretty darn near, Avi. Yes, short setup. You got it. Good eye. Hey there, Tim. Is my HPMR indicator only used for futures, or can you use it for an index? Oh, like the SPX. So, Tim, the HPMR is, here we go, a volatility and time tool. All right. And so as long as I have a way to measure volatility, and we have, by the way, the HPMR tool has been around for a lot of years and years here at Simpler. What first as just a spreadsheet and a calculation, and then we've automated it. About 90 days ago, I completely revamped. I shouldn't say the Lorna bot completely revamped this. We are using completely different data now. So this is a completely independent tool from previous data sources. And you'll notice the volatility zones are different, and they're going to reflect volatility in a way that is what I always hoped I would be able to do when I had a little bit more granular control of the data, which we do now. All right, so with that being said, here's the S&P, right? Volatility in time. Here's a micro, right? And you asked about the SPX. There's the SPX. So yes, absolutely. We have it for a number of symbols. I think we're north of 70 symbols, if I recall. We're north of 70 at this point, I believe. So we have this on many, many symbols. This is Apple. This is crude oil, Tesla. And this is an intraday trading tool for those of you that are unaware of what the hourly price movement range is. And again, what it is a tool that allows me to look at historical volatility and look at the way in which time and volatility are plotting support and resistance. So this is a process that I created well over a decade ago, and we've got it to the point now where this is really dialed in. I think the Lorna bot has outdone herself in terms of the accuracy. So thanks for the question, Tim. And yes, here's the SPX. You bet. This was a request. You know, we have the data now to do a lot of different calculations. So Karthik, no, we have stopped doing that from about 3 months ago now. I think it's about 2-3 months. This is a completely revamped tool. Yeah, Karthik, it's basically built from the ground up now in a very different way. Yes, definitely an upgrade. So thanks for the question. All right, next up, Prince. I've been in the SS room, Sector Secrets Mastery. Awesome. The past few days, and it's keeping me disciplined. Awesome. Well, you're doing it, Prince. So did very well. Awesome. Not doing dumb things. You know, maybe that should be our room slogan. Welcome to the Sector Secrets Mastery, where we don't hate our money and do dumb things. I love it. My pleasure. But Prince, you're doing the work. I appreciate the kudos, but you're doing it right. Um, so I hope to continue to see you there in the room. Awesome. All right. Next up is I had an aha moment. Hey there, Emily. Yesterday, when I said if our win rate is really high, that means we're probably taking profit too quickly. It's a really easy miscalculation to make, Emily. It really is. And oftentimes it's a reaction to being on the wrong side of the trades for so long that the moment we start to go uh, bullish, start to go green on our P&L, we're so afraid of losing that unrealized profit. It doesn't allow us to follow our trading plan. Yesterday in the Sector Secrets Mastery Room, many of you probably know, how long did we sit in gold and in bonds, whether that was the GC futures, micro, the bond futures, or the GLD and TLT, GLD puts and TLT calls. How long do we sit kind of in what I call no man's land, not quite hitting the target, but not getting stopped out either? How long we were there? A really long time. But as long as the trade is valid, and again, sitting in no man's land is a muscle that we must build. We give the trade a chance to work. And if I am too twitchy, right, and it's just a muscle. So um, I really appreciate you noting that. Hey, maybe I'm falling into that. But remember, if your win rate is good, now it's just a matter of saying, am I comfortable with a few more losses? Just a few, right? But larger wins, and that is definitely a balance. Yeah. So Emily, I appreciate that. Very, very cool observation. All right, Vicky asks euro. Euro is setting up for a short. This is the short in euro, long in dollar that we've been talking about for some time. And we are starting to see the confirmation of now this is tricky. This is tricky. And this is something that we sent out as an alert yesterday in the Sector Secrets Master Room on the daily time frames, which is the tricky thing is we're starting to flirt with an uptrend, but the trade is firing off. So we're going to likely keep a far tighter stop. So mastery folks, I'm going to see you in 7 minutes, and we'll talk about it in our morning session. And futures folks, I'll see you soon too. And one of the things that we can do is discuss if it merits putting a tighter stop. Maybe even at this point, I'm not sure we can go with a break even yet, but reeling in that risk, because we are dealing with a little bit of a shift in the market structure. All right. Next up, can I explain how I use trailing stops? Trailing stops, ideally for me, Martha, are we've hit the first target, I move to a break even, and when I hit the second target, I prefer to move to a trailing stop. So it's usually not a matter of really getting too complicated about where that trailing stop is. When you hit your T2, with T1 is a great trailing stop. Keep it simple. However, when we make that transition is far more important, I believe, than even where we've trailed the stop to, as long as you're not smothering the trade. This is where the 38 special, totally dating myself here, this is where the 38 special school of trade management applies. Hold on loosely, but don't let go. All right, next up, there's your earbug for the day. Great tune, though. Zane, to assist in ES day trading, do I see any value in combined chart of ES divided by the dollar? I don't know, Zane. I've never done it. I'm not a big proponent of looking at the dollar for a direct correlation to risk appetite or risk aversion. It skips a few steps because it's really the dollar is going to be strong if yields are higher or if the Fed's more hawkish. So I'll look at a couple other things, but I don't know because I've never done it. So I would say if it's giving you clarity, go for it. But I've never done it, to be quite frank. So I can see some value. I'd rather look at bonds, to be quite frank. Yeah, that's me. I like bonds as an internal I like yen as an internal. Euro could be on that list. There's your dollar relationship. And you can look at VIX. So those are some of the things that I'll look at, right? But that's a cool idea. Report back. Let us know how, what I would say, one of the things that Bot and I do, and Bot, what is your number? Before we release any adjustment of an indicator or even a new indicator, there is a minimum win rate that I have to establish personally to say, hey, this is working and I have a step-by-step methodology to share with people like we did in Volume Decoded in that class. I think Bot has something like a minimum of 100 trades before we even say this particular indicator and the way that we're using it has any merit. So I would say go through that process and document, and you'll learn so much in that process. And kudos for getting curious. That's great. Next up, looking at Walmart. Sure. After last week's rally, that's not just a rally. That's just boom. All right. That's a significant move within the context of a trend that's trying to gain traction. Sure. And the question is, what do I think? I think we need a pullback before we can buy it. That's what I would wait for. Maybe to the anchored VWAP, maybe to the wave. But we are starting to gain traction, and any kind of pullback would be welcome. Maybe even a gap close, right? So maybe we even get to 138.5. That could be an interesting level to get long at. All right. Vicky asks, how do I get the indicator? Sorry, Vicky, I know you asked me that about 10 minutes ago. Are you talking about the HPMR? I think that's the one we were talking about. So the hourly price movement range indicator, we've always made a free pack available to a handful of rooms here at Simpler that includes the indices. So S&P, NASDAQ, Russell, Dow. And then in the Sector Secrets Mastery, we have those futures contracts as well as their ETF alternatives. So DIA, IWM, SPY, QQQ. Then we've expanded the pack, meaning now we include energies, treasuries, currencies, indices, a number of stocks and ETFs. And that pack is, I believe last time Bot told me, about 70 symbols large, and we continue to expand those. So yeah, that's so whether or not you want to try the free one in my Sector Secrets Mastery or in the futures room, the Simpler Futures room, or if you want to just subscribe to the indicator, yeah, I would try the first one, try the free stuff first. I'll always tell y'all, try the free stuff first, before you, and I appreciate everyone spending the money to, use the indicators that we create. We spend a lot of time making sure they work, a lot of time. However, try the free stuff, see if you like it, right? Check out the version that we have. And then if you say, yeah, Rog, this is going to move the needle, then go check out the premium version. All right. Okay. Next up is, do I recommend, hey there, Christine, live trading as we're learning, even with a small account versus paper trade? Oh gosh. Okay. This is how I feel about demo or paper trading versus live trading. Demo or paper trading is good for two things. One, and don't underestimate the value of it, getting used to the platform, getting fluent in the platform that you're using. A lot of traders know the charts, but then all of a sudden they realize, oh my gosh, I don't know how to place a stop limit, stop order, limit order, modify them, cancel them. Know the basics. Be very, very skilled with your platform. Once you're adroit there. Then the second thing that paper trading is good for is testing out ideas. Am I seeing the setup the way I need to, right? But as far as paper trading being a sort of sim for live trading, never has, never will be, because a funny thing happens when money's on the line. We get irrationally emotional, and there's no way to really avoid that. I don't know many people who are money numb. I'm not. The emotions completely change the game. So that's where micros are fantastic. That's where inexpensive options where you can define the risk, long calls, long puts, are fantastic to take small, low risk, calculated risk in a market as you're learning. And so therefore, I don't believe sim, demo, paper trading has been much more beneficial than, again, get really good with your platform, which is so important. And then see if you're seeing the setups, right? Can you recognize them on the chart? And then make the leap to very, 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 very small position sizing. All right. Rand Wolf, hit that like button. I appreciate that. I do. I do. All right, gang. As always, thank you for being here and being a part of the Caffeinate and Dominate crew. I will see you all tomorrow for Charts and Coffee. Same time, same station. Be good to each other. My futures folks, my sector secrets mastery folks, I will see you all in just a moment.